Sam Mendelsohn is doing so much in e-commerce, and I'm going to tell you all about it right now. He's the co-founder of Workspace 6, a community for 7, 8, and 9-figure e-commerce operators. That's not really the main point of this conversation, though we'll get there a little bit. He's also the co-founder of 3 e-commerce brands doing a combined $12 million in revenue at a 7% bottom line profit. I say those numbers so you can have a sense of the context of his business. He also is the co-founder of Boxfort, a 3PL servicing fashion and apparel brands. There's a lot of different ways that Sam is touching the e-commerce industry right now. And I'm particularly interested in talking to Sam about some things he has told me recently about how being so involved so deeply in the e-commerce community has helped his business get profitable, and not just like eking out a profit, but growing, moving the right way, focusing on the right things. There's a lot here for brands in a lot of different spaces, and you're going to like this conversation a lot with one of my friends in the space, Sam Mendelsohn. Let's get into it. Dude, you are doing way more than I even knew in the space. I knew about some of the businesses, but I didn't realize how much e-commerce you're doing. Do you ever not work?
I feel like I'm working way too much. I'm trying to cut back a little bit now more recently, but I feel like it's also part of it is like the experience of being in e-commerce. Like a lot of people on Twitter that you talk to or kind of you follow, a lot of, I feel like, have had rocket ship growth. I feel like me and my brother with e-commerce didn't have that. We got in early, but we were too young and dumb to really capitalize on what I think we could have, like especially getting into Facebook ads like 2015. So like for us specifically, we plateaued, and I will like self-admit that I don't know if our brands have incredible product market fit. So like I don't know like the potential TAM or the ability for them to scale. A lot of the brands on Twitter, when you're talking to them or seeing them, you're seeing them after they've either hit on a product market fit vein that sometimes even the operators in the companies don't even know they had, or B, they basically are already past that part of their journey. For us, like, anyway, back to your original question, I feel like we do a lot of shit because it's like nothing was working. Or like nothing was working to the level we wanted. So it was constantly like, okay, we can't scale vertically, so let's keep on scaling horizontally. Now that we kind of, I feel like we got things a bit more dialed, I think now it makes more sense to kind of cull it down at some point in the next couple of years. But that's kind of why it was just more than should be happening, ideally.
Yeah. I think it's not a terrible approach to like put your hand in a few places, see where you think the biggest opportunities are, and then go push in harder on those. Like, I mean, it seems reasonable to me at those stages, as long as the cost of doing the thing isn't too high, especially if you're uncertain about product market fit and you're not like, this is the opportunity I definitely want to put everything into. It seems reasonable to me. I think people do this all the time. I
was thinking about that because I know you talk a lot about launching creative, like a ton of creative and whatnot, and the ad counts. And like, obviously you're giving every like ad an opportunity to scale, to like get spend and whatever. I was thinking about that recently of like, at least for us, one thing that's helped this year for one of our brands was starting to look at that, not on a creative level, but on a product level. So like certain products have a certain amount of available in market demand. And if we can only capture a certain amount, and let's say the product's not scaling, what happens if we like triple the amount of new products we're launching to basically increase the kind of like horizontal scale of our in-market demand from launching, let's say like, not saying socks, but let's say like sweater. For us in apparel, it's like sweaters, like dresses, like there's a different type of persona for each one. Taking that further, that's kind of what we did with brands is we ended up basically like, oh, there's a upper threshold we're hitting here for whatever reason. Let's just launch another brand.
It's like, I don't think that's crazy at all. I mean, in fact, I think the product thing that you're talking about, especially in fashion apparel, is the game. I mean, the product thing is like how much product can you release and how much can you create moments for a business like that is really crucial. And the notion of like, as long as you aren't giving such short shrift to one of the opportunities that you're missing out on the opportunity, which is always the danger, then I think that's the case. But I mean, you told me before we started recording that you maybe think your 3PL is the best business of all of those. And I think that's sort of interesting.
Yeah, I think, well, it's like, I gotta say it's very consistent. It's like, It's also, me and my brother talk about it. It feels like honest work, so to speak. I imagine owning an agency would be similar, where it's like, when with the e-commerce brands, like a lot of times when you're hitting a problem, it's like soft issues. You don't know what the problem is. It's like, why is this like particular product not working now when we were able to sell like 1,000 units a month, last month or last year at the same time? It's like, there's just like there's such ambiguity on what's the problem is. And then it's like, it feels like you're kind of just constantly just testing. And like I saw Taylor Holiday posted something about this, of how much running a brand is just constantly vibing. or a lot of people's decision making is just vibing everything. I'm like, I was like, I hate that. And I was like, that's pretty damn true. But like in the 3PL business, it's like you get an order, you ship it. It's like if you didn't ship it in fast enough, that's the obvious problem you're doing. You know what I mean? But yeah, it just makes it a lot easier, a lot more consistent, and it's just like a more honest business, so to speak. Not honest, but you know.
I know what you mean. Yeah, I definitely know what you mean. But one of the things I'm really interested in is sort of hearing you talk about. The reason I wanted to have you on is that you had said to me separately in the DMs, where a lot of our conversation has lived over the years. You had said to me separately that you felt like your e-commerce businesses had made a turn to becoming better businesses with better potential bottom line margin. They were sort of moving in a way that was meaningfully better overall, and that there were some things that you could point to that were the causes of that. And that was really interesting to me because you know it was sort of like, I mean, that's sort of obvious in one respect, but also like it seemed to me that you had seen a sort of a turning point in those businesses at some point. You described it a second ago to me as being a member of the community. But I'm curious if we can just kind of dig in a little bit more. Like, you know, you said they're bootstrapped, they had to be profitable from the beginning, but what has made them better, you know, at a more of a bottom line and maybe moving towards some more growth and bottom line going forward?
Yeah, I think the biggest, to add some context to this, back to like talking about my background, the multiple brands we run. We launched our brand in 2011, Savannah. And that was like, the reason we launched it, I think we were the 200th store on Shopify at the time. There's only 16 people working at Shopify when we first started. So like we're very early days. The kind of story, like I'll try and go as quickly as possible through our background story, but essentially my dad had an online business years ago. I think he started in like early 2004 or something like that, back before there was like Shopify. It was like back in the day where there's like no such thing as Google Analytics. There was like nothing. You just run in Google AdWords, you made money. And I think things were probably more simple, but obviously less data back then. Anyway, point being is that he had a bunch of inventory. He retired and he turned off all of his advertising in the 2008 market crash. And he was just selling like one order basically a week at that point, just shipping it out of his garage. Come fast forward to 2011, he still had a garage full of junk that he needed to sell. And he's like, hey, let's like boot up a website. If you guys want to sell it, we'll just split the money and like, you know, sell it off. I think it's $50,000 worth of inventory, you know, and me and my brother being really young at the time, we're like, oh, sick, you know, like 5-10 grand in our pocket. Let's do this. So we launched, my brother, who has background in web design, he launched our website on Shopify, got going, and then pretty much like I'll shorten the story, but essentially it kept going, found Facebook ads, and it became our full-time gig. We scaled our brand up to about 2, maybe 3 million at the time. Looking back now on the amount of money we were spending on just dumb stuff, like chasing every new Shopify app, every new like, you know, service, hiring like every single agency we could find for every single channel we could imagine, like just doing everything all at once was pretty much like our angle. And I remember distinctly in 2014 or 2015, turning our Facebook ads down because we went from a 7 ROAS to a 5, which this is before you guys essentially invented the MER term. Yeah.
I have that same story when I was at Kalo, where we were just like hammering out these arguments between $8 CACs and $10 CACs on a $30 revenue at like 90 points of margin or something like that. You know, and you're just like, turn up the machine, please, go, spend forever. That's what we should have been doing. You know.
I know.
By the way, I appreciate the allocation of the invention of MER to me. I can't take credit for MER. I think Taylor got that from somewhere. But a little known fact is that MER actually did come from me, and I don't. It's actually my greatest accomplishment in the world. I don't ever take credit for this, but because you brought it up, it was a conversation with Taylor, and we were like, obviously plenty of people thought about the idea of blended ROAS and some of that kind of stuff, but the specifically the designation AMER, acquisition MER, with the lowercase a, which is an important part of it, came from me and Taylor being really into baseball, and there's some baseball stats that have acronyms of lower and uppercase together. So anyway, I'm happy to take the victory lap on AMER.
You should, because that's a great metric. One, MER is a great metric, and MER is even better. But yeah, it's funny. Anyway, so I'll finish the story, but sorry. It's not to derail, but it's funny because we had talked about for years. And at that time, we were like 25% of our company's revenue has to be spent on advertising. And we always just refer to it as the 25%, the 25%, 25%.
Yeah.
And we didn't look at like acquisition or whatever. Yeah. And it's funny that it wasn't until years later, I feel like you guys invented that around 2017 through 19. I don't remember. Somewhere around then, I remember hearing that word coming from you guys. And I was like, that's the number, 25%. That's the number. Like,
that's right.
Anyway. So fast forward, we were turning our Facebook ad spend down in 2015 because we went from a 7 to a 5, which is like, it feels like thinking about Bitcoin now, to be honest. But anyway, and like, I remember we were shifting from agency to agency. They weren't working. They weren't good enough, like whatever, blah, blah, blah. It's crazy to think about when you kind of reminisce. But anyway, point is that clearly we just didn't know what we were doing. We were too young. Industry may have been too young. We didn't have all the knowledge, and me and my brother weren't really adults yet. We stalled out at about 2 to 3 million, and we basically coasted there almost until I think 2019, which finally, pretty much out of like semi boredom / just being frustrated. Me and my brother, we took one of our top performing categories, a jewelry line we had on our site, and launched that as a separate brand, Tiny Rituals. And then me and my wife at the time also were talking about launching another brand. She wanted to create an underwear company. So I was like, hey, let's do it. Create an underwear company. The product was incredibly unpopular, and we immediately pivoted over to dresses, and then that did well. COVID happened. I'm losing train of thought of why we pulled into this specific topic. But I was
asking about the pivot into real profitability and what had happened to do that. And so describing before and after
launching these new brands. And around the same time, we got basically kind of a big lift from COVID. So that kind of like that immediately juiced our revenue, juiced all of our brands, kind of jumped up. And then right after COVID, like the halo effect of COVID collapsed, we saw all of our brands were starting to kind of collapse down. At that point is about the same time that I launched Workspace 6, as well as with Philip and Danny, and then our community, and then also got really way more active on social media. And I just basically think like there's a lot of little points that I feel like helped us to start scaling again, which specifically happened the past 2 years. Primarily is absorbing so much information from Twitter and LinkedIn, realizing that like there's no silver bullet. And two, I remember that there's a lot of things, that especially you and Taylor Holiday have said that has resonated really well with me. One of them being with Taylor was, I remember one time he wrote on a Twitter thread, basically said, it's not hard to do, buy something online. And like all these gimmicks, all these like apps, all these services, all these different things you can be doing, realistically, at the end of the day, it's really easy to buy something online if someone wants it. And I was like, damn, yeah, that's true. Like you don't necessarily is the loyalty points app that you just spent, a month of your mental energy downloading and installing. Maybe it's a really big benefit for your brand, but maybe it's not. Maybe at the end of the day, the person just wants a product at a right price point, and they want some kind of creative that essentially inspires them to want that product or like builds that demand. So anyway, I think the biggest takeaway was just, it wasn't one thing. It was just basically absorbing all this information, just realizing that like we were doing way too much. We were focusing on way too many things. And at the end of the day, it really just matters as creative. It's kind of unsexy. And to be honest, the businesses have gotten more boring to operate more recently. But it basically all comes down to creative. Is your site usable, like user friendly? Are you optimizing it? And how is the product? Is the product good? When people get it, do they want to buy more of it? And are you advertising the products that people actually do like buying more of? Stuff like that. I know that's kind of I have a tendency to ramble.
I am so happy to have Workspace 6 as a sponsor of this show. That is not actually the genesis for me having Sam on this episode. Sam was going to come either way because we were talking about the way that he has been able to move his businesses towards more profitability, more growth by focusing on the right things. And when you talk to Sam about how that happened, he says the crucial lever, and as he said in this conversation, one of the crucial levers was hearing from other people in the community, watching what was happening, learning from them. And a lot of that has happened in the context of Workspace 6, the community he has built for 7, 8, and 9-figure e-commerce executives and operators, folks who are running good quality e-commerce businesses and who are ready to talk about it. And in Workspace 6, which is primarily a Slack-based community, there are over 900 members of the store who are sharing information, sharing insights along their journey so you can learn what is good and what is not. And one thing I love is when I asked Sam, hey, but before I accepted their sponsorship dollars for this show, I said, hey, can I go into Workspace 6, check it out for myself, etc.? He said no. And he said no, not because he doesn't like me, but because service providers and software companies are not allowed in there. So you can be in with other e-commerce actual store operators and talk in real honest terms without, hurting anybody's feelings or worrying about those kinds of things, about evaluating service providers, software providers. In fact, multiple of my clients are in Workspace 6, potentially saying bad things about me. And if they are, that's fine. They need a place to be able to say that and to be able to voice those concerns honestly without me looking over the shoulder. I think it's good for them. I think it's good for you as well. I love what these guys bring to the table. It's also really affordable. $1 for your first month. After that, $99 a month. And there is no minimum commitment length, so you can leave anytime if you're no longer seeing the value, which is hard to imagine because that's just not that much money to be able to evaluate things that can easily move the needle in your business and push you in the right direction. Workspace6.io is the place to do it. Go sign up today. It is funny though, like the idea of like chasing all of these different things versus the simple idea that like it's actually fairly simple to just like buy something online and you just want to kind of do things that make it simpler for people and make good products and stuff. I think it's good, but I do want to actually dig into that a little bit more. But do you have a goal for your e-commerce businesses? Are you trying to get them somewhere? Like how are you thinking about sort of, you're at this stage right now where you're putting up 8 figures in revenue a year across 3 businesses. It sounds like you're running them reasonably lean. Is there a goal to get them to a certain number?
I mean, there's an internal goal of like, I want to see $100,000 day from one brand.
Nice.
We've seen it collectively, but I want to see it from just one single brand.
I love that. That's so specific. I like it.
Yeah. So I want that.
How close have you gotten?
I haven't on one of our brands. I think we got up to 70 one time.
Okay. That's awesome. Yeah.
On a day that, we spent a fortune on Facebook ads. I was like, I think maybe the cost cap broke that day or something like that. I don't think it was even a profitable day, but it was cool seeing that number. Anyway, and then I'd love to have one of the brands do 10 million in a single year. And I'd love to have, I think my goals are basically 10 million for one single brand on trailing 12 months revenue on net, not on gross. And then $100,000 a day would be sick. I think those are the two.
How hard are you pushing to get there? It sounds like with your hands in a lot of different pots, it feels like you're kind of content to kind of go, we're just going to keep steadily doing this. It doesn't sound like you think of any of the businesses as being $100 million opportunity or anything like that, but maybe that's wrong.
No, I don't think so. I think the other thing too is I've realized that with Workspace 6, because I've reviewed hundreds of applications for brands, I've noticed that I think having looked at this point, because we have 950 members on there, having looked at 950 applications for brands that have applied for Workspace 6, I've realized that it's incredibly difficult to tell why. Like there's, for example, a t-shirt brand will join and they're at 2 million, and then another t-shirt brand will join and they look pretty damn similar and they're doing 50 million. And I'm like, what? I don't understand. What's the difference between this one and this one? Like I can't even like suss out why this particular brand is doing so well. And I think there's some level of like resonance with customers, the available market, whatever it might be. It's just that particular product is hitting on it. And I think operators within each brand don't always know that, basically like either they don't know that the level of success they're having in that particular brand is due to luck to a degree, or some level of like, maybe they have a personal passion for this product. So they're the user persona and they built something they need, and there's a big enough TAM for that particular product, and they're hitting that perfect wedge to scale up. Facebook is a machine. I mean, it can basically find your available market and scale it. So it's basically like, if you have the right margin, if you have the right risk tolerance and you have the right product for a large enough, like in market demand, it'll find it and scale up, based on how much your operations can handle it. So anyway, my point is, for us, I would like to get to 8 figures. To be honest, I don't know if I want the stress and hassle of going to 100 million.
I hear that in the way you're talking, which is like you want to keep growing it, but you don't strike me as somebody who's like really driven to go build something crazy,
Well, yeah. I think that too, it's like, I guess it depends on the objective. Like, I was thinking about this the other day, is like, we're talking because I just got back in town. I was gone for like 2.5 weeks in Europe, working like 2 hours a day. And I'm like, why, what's the advantage at that point? I feel like past a certain point, I don't know if other people talk if other people talk about this, but I feel like at a certain point it becomes just the fun of the game, not necessarily for the money. And then you don't see marginally how much more happy you're going to be with more money from your company, So it's like, at that point, it's like, what am I doing this? Maybe it's like, if you have a certain drive internally and you want to hit that $100 million mark, just because, again, you love the game and you want to be more competitive and play at a higher level. Probably as an athlete, you basically kind of resonate with that. Maybe that's why
I'm not very ambitious. I mean, I relate much more to what you're saying. The Europe for 2.5 weeks and working 2 hours a day is not exactly what my version of that would be. But, like I've said for a while, I really have resisted trying to grow the agency aggressively. I'm starting this brand on the side right now. It's not something I expect to be a huge thing necessarily. I don't know. We'll see. We'll see what the 90% of the outcome is. But
for everyone, it might be a different thing. For you, it might be more like church and children. Spending quality time. I think
that's
with your family.
exactly right. Yeah, that's exactly right. Yeah, for me, like my local community is really important to me. That's centered around my church for sure. And I'm not really willing to work much more than 40 hours a week. It happens occasionally, of course, just like something like that. But it's really rare for me. Besides client visits or something like that, where it just necessarily eats up the full day. But yeah, I have some things like that, and I'm interested to hear how directly you have connected the way that you are operating your businesses and the way that you are engaging with them to what you see as the pathway to joy in your life. You actually use the word happy, what makes you happy, did you like come to a realization about that, or was it something that you sort of discovered over time? Like, did your drive for a big thing used to be different and now it's this, or has it kind of always been this way for you?
Yeah, I think a lot of the FOMO of like watching social media, because you see a lot of people post up big numbers on social media and you're just kind of like, it gives you that little bit of like, oh, what's wrong with me? Why can't I do this? Whatever. I mean, years of that. I mean, again, because having launched in 2011 and being plateaued for so long. And then like, yeah, we're doing good now, but it's at the same time, it's like, I think it's also a bit of fatigue from primarily Facebook like running on any platform you don't own it's such a dopamine high and low on an intraday basis of like hourly sometimes, that like you start to get a little bit more numb and start to realize like, okay, like let's free focus on something else because it's purely unsustainable. But yeah, I mean, I think realizing at a certain point, like especially as our revenue and our businesses got bigger, I realized I'm like, what would doing, again, I do want to get to that 10 million mark, just because I was just like, I want to know that I have an 8-figure brand, like a single 8-figure brand. It's nice that they're split up across all of them. It's great that we have more revenue and we're doing well and, all that. But it's like there's something about having one single brand doing 8 figures is like what I want. And hopefully we'll be able to get there maybe this year or next. But yeah, it's like at that point, like past that, it's like, what else am I going to get? Like two of our brands only have 2 people working there. So it's like, they're lean. At the end of the day, they're insulated. So like if everyone were to drop in half, I'm not worried about like, oh crap, I need to fire staff or anything like that. It's just, it can flex up and down pretty much like within a massive amount of revenue. So yeah, I don't know. I think I just got there at a point. It's like, what's the point of going further? And I actually saw, I think you were talking to maybe Ron from Dr. Wolf on Twitter the other day. I love his posts because he's very thoughtful. And he's very analytical, thoughtful, and kind of very like in depth with what his kind of analysis, both on his own brands, but just in general. And it's interesting. I think you guys are talking about like exit strategy, of how much like a lot of people talk about exiting or like the value of your brand and whatever. Yeah. And it's like, once you sell it, like what would you do? Yeah. You know what I mean? Like, anyway, it's something.
Yeah, it's an extremely common story that people sell their business and become depressed. Like, that's not everybody's story. I don't want to paint it too negatively, but like, I think my 2 cents on this is that if the calculation is actually pretty simple. If your main meaning and purpose in life is your business, then when you sell your business, you are losing your main meaning and purpose in life. So now the answer to that might be to start another business. But what I think a lot of people find is that they can't quite drum up the same energy for the next thing because they've already gotten to the finish line on one thing, and the thing that they were building everything towards has now gotten taken away from them. And again, I don't want to oversell that narrative. I think there's all kinds of reasons people have that. It is invigorating to have purpose in things. And no matter what your relationship to that purpose is, it's probably a real loss of something once you sell your business. But I think that there's something to that when you hear people talk about what's difficult about that, what happens is they move from a producer mentality to entirely a consumer for some period of their life. And I think that's probably great for a little while, but in my experience, consuming all the time is not actually that great. That's the promise that people are holding out for, but that it's actually not the thing that provides the most joy in life. So not to say you should never do it, not to say you should never go to Europe for 2.5 weeks. And, it's awesome. Like, of course you should do those things, right? Like I like to have fun and do things too, but that's just my read on sort of what is happening in people's psyches when they go through those situations.
I think also a lot of people, when they launch their businesses, they struggle to get to a point where it's comfortable enough for them to feel like they're there. And then they're constantly in a state of like, once I get there, you know what I mean? Rather than kind of stopping and thinking like, okay, like, yeah, there is a certain level of like comfort that comes from getting to the point where you're no longer like deeply worried. Like running a brand at 1 million is absolutely the worst. It's like, it's the worst experience ever. Like 1 to 3 million. It's enough.
It's really hard.
It's enough to know that you're like, you have something there. It's a business, but realistically, it's not enough to pay yourself any real amount of money or hire anyone of any level of like high level quality to help you. You know what I mean? So you're in like a dead zone. So I think a lot of people probably have a little bit of like psychological trauma from muscling through that range until they get there. And then it feels like they're just in this constant loop to get further and further and further, like something's going to go away. But I can only imagine like, anyway, my point is for us, the goal is not really 100 million. It would be like, we do plan to grow and like, of course. We have like our brands have one of our brands has a 40% year-over-year growth goal. We're currently like 70% year-over-year. And then the other two are targeting 20% year-over-year with varying levels of success on that. But ultimately it's just for the fun of the game, not so much about like specifically an exit,
specific goals. Yep. A 40% growth rate too is like that's a real number. That's like that's hard to do, and to do that profitably and some of those things. I want to come back to something you said earlier though, which is something about sort of the comment from Taylor that allowed you to sort of resist some shiny object syndrome. Have you found that now you are much more streamlined and focused in the things that you're trying to apply your mind to in the businesses after that comment from Taylor and after that kind of realization for you?
Yeah, there's a couple of things. I'll actually pull it up right now and I'll read them if I can find them quickly. But there's a couple of things from Taylor, just in general, things I've read overall over time. Let me see if I can find them. I remember, so the things that have been most helpful for me, for basically us to kind of get back into growth and scaling was, first off, one, that kind of like comment from Taylor I found really interesting. I thought I don't know how involved you were. I don't know if you were still with Taylor at CTC or if you guys were working together, but I remember it was like the e-commerce playbook for 8-figure brands. Do you remember that from a couple years ago?
No, it sounds like Taylor. But was it his like duckweed kind of thing?
It was like a scorecard thing where basically essentially
that was all Taylor, but it's really helpful. Yeah,
it was super helpful. So essentially the premise was low OpEx, high margin. So like this is the DNA characteristics of an 8-figure brand. Low OpEx, high margin, preferential terms with suppliers, fast lead times, diverse traffic mix. And if you search it or you DM me, I'll try and find it, and I'll drop you, DM me on Twitter, and I'll drop you kind of like the version I wrote up of this. And then you kind of essentially the way this works is you rank your brand and determine like, okay, how much do I score on this scorecard of like how true is this for my brand? And it kind of determines how successful potentially your brand will be. But essentially the premise is, from what Taylor and the Common Thread Collective team noticed, is all the 8-figure brands they work with have these particular characteristics. So again, low OPEX, high margin, preferential terms, fast lead times, diverse traffic mix, LTV increase of 30% within 60 days, or 100% increase in 12 months. CAC to AOV ratio is 1 to 3, and distribution channels greater than 2. So for us, a big thing was basically immediately looking at that and like, okay, what can we reasonably achieve? What can we reasonably not achieve? Start trying to hit them. So for us, like one thing we did is literally we just took our pricing, was like, you know what, screw it. Let's get our margin. You know what I mean? Like, let's not fight for basically like saying we can't charge more money. Let's just charge more money. And for us, like at a 2 to 3 at the time, I think we were $1 to $3 million. It's like, it's not like we're risking something massive like a company like True Classics would be risking by changing their margin structure. That's right. Yeah. You know, it's like, when we didn't do testing at the time, I wasn't in the testing yet. So I basically was just like, cool, boom. Like, and we just did it simple. It's like, all right, when we get a product, 5-time markup, like just multiply it by 5, round it to a number that sounds nice. Cool. Go for it. Ship it.
Man, there's so much you could do to go attack your margin business, but that's the most underrated thing, is just charge more and see what happens. Yeah. And you're right. Like, you test this now with INTELLIGEMS in a way that would also allow you to see what the trade-off is much more clearly between the test, like between the conversion rate and the margin and some of those kinds of things. Shout out INTELLIGEMS, sponsor of the show. Yeah.
Shout out to INTELLIGEMS.
Sam brought it up. I didn't even have to. Price testing. Changing the price of your product is a major needle mover for operating your business with a profit-first mentality, and you can do it with my friends at INTELLIGEMS. The reason price is such a big deal, right, is because it has such a big impact on a customer's perception of the product, their willingness to pay for the product, and on your margin at the same time. The fastest way to get more margin in your business is really simple. It's to raise the price. The problem is you don't know if raising the price is going to make it so that many less customers actually order, that the trade-off between the price increase and the margin you get and the potential AOV bump is not worth it relative to the conversion rate you lose. And of course, the opposite could be true too. Lowering the price might bump your conversion rate, but is it worth it at a margin level? Well, you can learn that definitively with INTELLIGEMS, which is the best CRO tool I know of for Shopify, because it helps you answer these kinds of questions in a quick, easy, smooth way. You can get it onboarded onto your site, added to your site without the help of a developer really, really fast. And INTELLIGEMS will help you out if you get stuck. And you can start price testing and you can find out how that's going to work out. And then crucially, measure not just by conversion rate, not even just by AOV, not even just by revenue per session, but by profit per session, because INTELLIGEMS ties into your product data so that you can actually measure the outcome based on contribution margin level metrics like gross profit, as opposed to just revenue, conversion rate, et cetera. Like I said, you can apply that same kind of thinking to things like your free shipping threshold. That's too high or too low, maybe hurting conversion, helping conversion, hurting margin, helping margin. It's a really, really big deal. It's very close to the point of purchase. What about your site-wide offer? I talk about this a lot, but a lot of people just throw up a 10% off for new customers on the site, and they really have no idea if that's cannibalizing full price customers, or if they could do like a bundle or a stack and give people a bigger discount for buying more at the same time. And they don't know how it's going to affect, once again, not only the conversion rate, but the margin, because the more discount you give, the more margin you lose, but maybe the conversion rate's worth it, and so on and so forth. All those questions are hard to answer on your own, but very easy to answer with INTELLIGEMS. Go to intelligems.io today so that you can operate your business. Of course, everything else that you would do normally with regular split testing, A/B testing, INTELLIGEMS can handle all that as well. The old sort of the simple replacement for Google Optimize, that kind of stuff. And you can operate your business, as I was saying, with a profit-first mentality, operate it excellently. Go do that at intelligems.io and use the code FARIS20, FARIS20, to get 20% off your first 3 months with INTELLIGEMS. Really great product, and I'm very happy to recommend, very happy to have as a sponsor, intelligems.io.
On that note, on INTELLIGEMS, like that cuts both ways. Obviously, this is a theory of like, like basically principles to basically apply to your business. But that being said, I think the more like meaningful takeaway is not necessarily the high margin. It's also purely price testing, because obviously if you're priced, like I have a friend of mine whose business tripled in volume by lowering his pricing by like 10, 15%. You know what I mean? So like it can kind of cut both ways. Anyway, so those are big things that are super helpful. That just focusing on, like, we went in and just gutted like all software. We basically went in and was like, what is creating meaning here? Okay, cut it. We also went through channels. So we're like, okay, we're clearly a brand that makes money off Facebook. And I remember specifically, this is back before I was doing the Facebook ads myself, for one of our brands. And we had like a agency we hired, and this agency had a split, like we were spending like maybe $1,500 a day. And he had us on like TikTok, Pinterest, Facebook, Google. And like, he was telling, I remember distinctly, which is crazy to think about now. He's like, oh yeah, well, we need to expand to more channels because, we're probably getting like channel fatigue or ad fatigue. And I'm thinking, like, at the time, having owned a small business.
You don't know, right?
Yeah, you don't know. And you're just like, oh, this is my agency. They know exactly what they're doing. Like, not saying agencies don't know everything. I know there's good ones and bad ones. But he was coaching me on like, oh, we need to get on TikTok. And after we took our ads back over from them, I remember we were looking at this and we're like, I don't know anything about TikTok, Pinterest, like all this stuff. And we know that Facebook is like our main driver. Like, what would happen if we were 20% more effective on Facebook versus, try and be 20% more effective on all these channels? Let's just do Facebook. And obviously immediately our sales went up from that. That was a big like simplification of just one channel. So one rule I wrote for me, this is again, back to my like kind of things that have helped us grow, is I don't think that brands should expand channels more than one channel per 10 million in revenue, possibly 15.
That's a really good way to put it. I like that a lot. I a long time ago, I recorded an episode. It's probably not even on YouTube. It's probably only on my Spotify feeds and stuff. But it's just like, don't diversify ad channels. Probably one of the first episodes I recorded when I switched over to the Andrew Ferris podcast from what I was doing before. And yeah, I mean, it's just. The point is, spend your next dollar in the place that it's actually next going to generate the highest return. And for a very long time, that's Meta. And you don't really need to explore that until you get to other places. And I think a simple heuristic of like, you're allowed to think about it again at 10 or 15 million. And you may actually still come back and say, nope, still Meta. But that like, you're not even allowed to bring it up until then.
There's people comfortably spending $50,000 to $100,000 a day on Facebook. You're not hitting ad fatigue on $1,000 a day, $2,000 a day in spend. Like, simply put, you're not. Like, there's something wrong with your business. Your business either has no TAM, it has bad creative, or your site sucks, or the position or the margin is terrible, or the ops to fulfill the demand is not good, something along those lines, or product's not good. It's not Meta at like $1,000, $2,000 a day in spend. So anyway, that was a big thing. Like, we cut all channels. We basically cut all expenses. We trimmed everything down to basically as little as we could, and got anything we did have, we put onto variable costs. So like, we have a designer for our brand, but he's a contractor, and he just works whenever we have a project for him. So everything, all of our pricing became variable for all of our expenses across both people and software, and like all of our operations. We create our 3PL. So now suddenly all of our own brands, our shipping and fulfillment costs now are a variable cost. There it scales up on seasonally up and down. It's not a fixed cost of owning a warehouse. And then focusing on one single channel. And then another big unlock for us was focusing on reducing the amount of touch points in the ad count. One, reducing the amount of campaigns. We had a bunch of campaigns, simplifying that down to a few campaigns, simplifying the ad account structure, letting Meta just cook and do its thing. And again, I know you guys kind of like beat the drum on this all the time. But like, really trusting Facebook to do its thing. I didn't unlock the cost cap thing until more recently, probably in like November of last year. Huge advantage, and it's been super helpful for us. But like, really narrowing down on that has been huge. But last year we grew a lot, not on cost caps, and I think that was largely due to I stopped making any adjustments to the ad account. On one, I would never turn off an ad. I just would trust what Facebook would spend the money on explicitly. So I'd be like, if it was spending on something that looked inefficient, I would look at the company as a whole, not the ad itself, and determining like, oh, that ad is good or bad. I don't know if that's right or wrong. That's just the way I was doing it.
Yep. Makes sense.
And then I stopped making decisions on daily performance. I would only look at things,
especially at that volume.
Yeah. And then I started looking at it on
looked at things. Yeah. 7 day. Okay.
7 or 14 days. So like at that point I trained myself where when I opened my ad account, I would not look at day to day. I would only look at the last 7 days. And at that point I'd look at, ROAS or like average CPA, in Facebook, and make decisions based on that. So it's like, if I need to increase budget, but really flip the switch for me onto cost caps, which is where we've really hit a lot of scale this year for one of our brands, was realizing that I was always increasing or decreasing daily budgets on campaigns based on the ROAS or this target CPA on those campaigns. Yeah. Which basically then I realized at a certain point, I was like, wait, that's basically what Taylor's been talking about, or Taylor and like Andrew's been talking about the, specifically like cost caps. And I was like,
they're just doing it for you based on a better model.
Yeah. I know. What am I doing? Like, I should just like turn, like I'm making these and I was like, I'd never be confident enough to like just triple my ad spend in a single day. So anyway, point is that I switched over to that, and that's been a huge unlock for us this year. But a lot of it is just really just like, it's not doing certain single things. It's like more just like pulling away from doing things and just doing the simple things better.
Yeah. I mean, I think what I hear in that answer in a lot of ways is a funny combination with what you were saying earlier about your businesses, because what you just described is like aimed at more margin, got rid of a bunch of software and agencies and things like that were end up creating a bunch more cost for us, focused on one channel and got our brains out of the way. And what I hear about that is like focus. Like you're just like, your knowledge from the community was focus, and that has helped you to generate a little bit more there. And it's funny to compare that to how scattered you are across businesses, right? You've got like 5 different businesses and some of those things, but that maybe that's the way to actually do it. But maybe what that allows you to do is actually do exactly what you're doing, which is just play with more businesses at a time and see where you think the real opportunity is by putting less of your effort and cost into each individual business, right? So you just go like, hey, we're just going to make the creative, we're going to run the manual bids, we're going to try and get out of the way of those kinds of things and do that. It's sort of a funny combo of things to be doing, but it sort of makes sense to me.
Yeah. Well, I think also I think the other thing too, people don't equate enough is opportunity cost. So back to like the single channel thing, launching any new channel realistically, unless the creative is identical, like you're really launching an entirely new ability to create. Let's say you launch on, let's say YouTube. I assume YouTube content. I've never ran ads on YouTube personally, but I assume the content you run on YouTube is very different from Facebook. That might be the same thing for connected TV. It might be for catalog, whatever channel you're, pulling the strings on. The reality is it's going to take your smartest people in your organization, probably a lot of mental energy and time to basically build that up. It's almost like building an entirely new business. So making sure you have the scale to actually run that, and invest in that and pay the right people to do the right amount, kind of work to make that a success and build it. And it'll take probably 6 months to 12 months for it to really work. It's not going to just click and suddenly you're, scaling like crazy on catalog. You need to learn it just like you learned Facebook in the beginning, or Google, whatever your main channel is. So that's what I found is simplifying to one single thing. Yeah. I think in general, focus was, for us personally, focus was huge. And then we also implemented EOS about 6 months ago, nice. 9 months ago, which that also has been super, super helpful because it kind of shaves off all the distractions once you have that scorecard, that weekly scorecard going. Because it's I still have a tendency that I think a lot of e-commerce founders and e-commerce operators in general have this, where they're typically very intelligent, they're very driven, they're very ambitious, and they're also very impatient. And it's very hard to, even when things are going well, to just let it cook and let it do its thing, versus they kind of start to focus on because again, we're all a lot of us are chasing a dopamine high, especially seeing numbers on Facebook and Shopify. It's almost like a work that's gamified. So, when you hit a high number, that dulls immediately and you need your next high. EOS has been super helpful, just basically looking at things and looking at things and objectively seeing your scorecard and being like, okay, things are going well, leave it. Just keep doing what we're doing, leave it. You know what I mean? For us specifically with our brand Sozi, I remember for the past 30, one of our scorecard metrics is like year-over-year growth. So our target is for last 30 days, year-over-year growth, and our objective is over 40%. And so like we got up to 120% during, I think it was April.
Nice.
Yeah, I think maybe it was March. But anyway, point is like like we were at 120%. I was like, yes, man, awesome. Green on our EOS scorecard. We're getting above our 40%. And now it's down to 80%. I'm starting to like, oh my God, do I need to change something? Do I need to like tweak the ad account? Do I need to like whatever? I'm like kind of starting like to tweak out a little bit. I'm like, and like having that EOS system in place.
That's
and like
really good.
Yeah. I was like, realizing I'm like, why am I'm above like goal here. Like, leave it. Don't touch it. Like
keep going.
If it keeps going and like if it does dip below, that's when we pull levers and we move things, but just let it ride. You know what I mean? And anyway, I think that's a big thing. I think, a huge thing is just delaying the amount of time you make decisions, which I know you talk about all the time, specifically on Meta and Facebook. But just in general, I think that's a huge problem I know I had early on with my e-commerce journey of just too many like constant shifting, changing, adjusting, and never really letting anything take time to mature or even do proper testing. Really, I mean that's really just proper testing. But
yeah, it's interesting how much my relationship to my ad account is very similar to my relationship to like my Twitter feed or my phone. Where I have to like. I just pull it up a million times a day and check it a million times a day. And it's like, it's such a bad way to behave. And I've gotten better at like, I'm interested in it all the time, but it's like when I'm bored, it's like, that's really good stuff, Sam. We've only got a few minutes left. I want to just see if there's anything super top of mind for you between conversations you're seeing in Workspace 6, between what you're seeing in your brands, your 3PL, anything that you, are looking at right now and you're going like, this is like a thing that seems really helpful that has happened for you or for other people you've been around that you feel like you're thinking a lot about. Most people I know who are involved in communities like this, who are running brands, have something like that bubbling up kind of all the time at the risk of some shiny object syndrome here. Mm-hmm. So yeah, anything like that for you right now?
I think, no, to be honest, I've noticed that the quickest way to explain it, especially from my experience running Workspace 6 and also just being in a community and being like absorbing more information than I would normally, is realizing at how much it's the exact opposite of doing things. And actually it's the exact opposite, like doing less better, and the core fundamentals better, whether that be creative, running your Facebook ad account better, like slowing down decision-making and doing less. Seems to be, I've noticed a trend of new members who join Workspace 6 are always like, what does everyone think about this app? What does everyone think about this app? What about this agency? What about this thing? What about this service provider? It's like whatever the new thing they're seeing, they're like, they're asking. And over time, the longer a member is part of Workspace 6, I noticed it's kind of like their activity level starts to slow down and what they ask about starts to shift from the next thing, because you have all these experienced operators jumping in being like, you can do it, but it's not going to it's not going to get what you want. You know what I mean? Like it'll help maybe to a degree, but like keep in mind it might be a very small incremental help. If you're struggling, it's the new product, it's the new creative, it's the new, maybe a price test. It's more fundamental things, which is kind of again, it's boring, but I've noticed that there's a all things when there's enough operators in a single space like Workspace 6, I notice that it stops being about shiny objects and starts to slowly shift into the fundamentals, which is new creative or like creative, whatever that channel, whatever creative that might be for the channel you're on, new product, like, obviously operation stuff that, need to be fine tuned. Like tariffs is obviously a big issue for everybody. Yeah. And then, CRO testing, whether that be price testing, shipping thresholds, right. Stuff like that. But it's kind of weird that it all centrals down to being kind of boring in a weird way.
I think that's a great spot to leave people with, to be honest, because I think it fits really well with what you've said so far in this conversation. And I think it fits with what I see as well, which is like, you focus on the highest leverage movers and that gets you really far. Like I said, like thinking in terms of bets, like those are the things that really get there. And the brands that can be really laser focused on that stuff, I think can get really far. So I like that a lot. Go ahead. Yeah, go ahead. Please. Yeah, absolutely.
One last takeaway too, because again, I do see a lot of brands on Twitter talking who are not part of Workspace 6. It's just like, I think if you're struggling, it's one, like if you're struggling for too long doing what you're doing, either quit or fundamentally change what you're doing. Because in a world where Facebook ads can reach 1 million people, 10 million people a day, if you can't be growing comfortably, like when you go into Costco and think about how much money is being spent in a single Costco in a single day, multiplied by how many stores, there is so much scale and volume happening in the world that if your product is stuck, which is for me is a long time, that's sitting at that 1 to 3 million range. If you're stuck there for a long time, you can't seem to break past wherever you are. And maybe that's lower. Maybe it's like $500,000, maybe it's $100,000 a year, whatever it might be. If you're not growing, there's a fundamental problem wrong, and you should be taking swings and making changes on the fundamental thing in a mindful way. It's not the new ad channel, necessarily. It's not the new app.
At that point, it may not even be it might not even be about getting a new ad. And this is like sometimes with the chase of endless new creative. Like, I'm a big fan of high volume creative and creative variation, all those things, but it's still like. It might not be the issue.
Yeah. A good guy to DM too is I don't know if he want I know there's a couple members of Workspace 6 who I know they were plateaued, and they shifted to launching new products or product categories and have had massive success.
It goes really far.
It was maybe they're just in the wrong product, wrong category, whatever it might be. So anyway, I just think in general, the takeaway is doing less, but also focusing on fundamentals. And if you are hitting that resistance point, there's a reason why, because a platform like Facebook should allow you to spend $50,000, $100,000 a day, comfortably.
Yep. All right, man. I love it. Sam, everybody should follow up with Sam in a few places. Number one on those should be on X. Sam's really active there and will respond to your DM. So hit him up there if you have questions about his brands, about his 3PL, especially if you're fashion and apparel. They specifically ship fashion and apparel. And also about Workspace 6. Join that community, which is a sponsor of this episode. This is not a sponsored episode per se, but they are one of our sponsors on this episode. So check them out. And so, Sam, thanks so much. The link for your X account is in the description and in the show notes of this, so people can go check that out if they want to follow up with you there. Sam, thanks for your time, man. I appreciate it a lot.
Yeah, I appreciate it, man. Thanks for having me. I feel like we could go for hours on this.
Yeah, long time. Yeah. Thank you so much for watching or listening. I've got a bunch of great episodes coming up that you are not going to want to miss. That includes Bear Handlin from Born Primitive, one of my favorite brands and favorite people in e-commerce, to talk to about the way they went from almost no profit in the mid 8 figures to a monster profit number. That's going to be in my Profit Monsters series. We're going to talk about how they got slowed down and how they started losing profit even though they were growing and things were going well in a lot of ways. And then how he turned the ship around and generated a bunch of profit in the business. From there, we're going to talk to Bill D'Alessandro about the sale of Natural Dog Co. What did he do to build the business, and how did he get it to sale, and what is there to learn right now about valuations for e-commerce businesses, etc. Bill is a good friend in the space. He's going to be really helpful. A bunch of other great stuff coming. Matt Bertulli is coming soon. A whole bunch of interviews you're not going to want to miss. So subscribe wherever you're watching, listening. Subscribe. I'd also love to hear from you. Podcast at ajfgrowth.com. If you have any thoughts, questions, any of those things, please fire them my way, or do it publicly at Andrew J. Ferris on X is the best place to do that. And sign up for my newsletter at ajfgrowth.com. Continue to put more time into making that better, including the software side of things and some of that, if that's been annoying to you. There you go. So ajfgrowth.com is the place to do that and really learn anything about what I'm doing and what content I'm putting out. And if you want to try and work with me, right now I don't have any spaces, but you can get on the wait list. Thanks so much for watching, for listening. I will see you next time.